Hi, in this video we will examine some candlestick patterns and do not confuse them with price action patterns because price action has its own patterns while candlestick chart provides yet another set of patterns which can be used in conjunction. So let's look at some patterns in order of importance. Uh, I wanted to show you first the evening star. The evening star, so here it is from here to here. So this is the evening star pattern. So basically, it's a three candle reversal pattern. It happens on top of the trend. The first candle is an impulse candle. It's usually Marubozu or standard. The second candle should be Marubozu or standard with the full body above the first candle, but it should have a smaller full body, or it could be a doji candle, which gives it even more importance. And the third candle should be a bearish candle, and it should close to at least 50%. It should break at least 50% of the first candle in the pattern. So, uh, so what's the logic here? Well, the logic here is that anyone trading can see this happening on the market. And after a strong uptrend, the market feels that the correction or trend reversal is possible. The last impulse move, I mean, this impulse candle, um, makes the highest highs in this trend, and it basically makes it the best selling point. After the first candle, the doji provides us with equilibrium, and as we said before, the doji equilibrium can be considered a resistance or support level, especially if it's on top or a bottom of a trend. The first candle gives us confirmation because it's a bearish candle and it breaks the first candle almost completely. So this would be a pattern, and what's happening next is that the market is pulling back a bit. The logic behind this now is that after the completion of the pattern, the veteran traders are waiting for a good position to enter. So when the market pulls back almost all the way to the resistance level, here we would have a little risk of this trade because we would put the stop loss around here and like we would enter a position here. So now the sell-off begins and the price drops quite a bit and it comes all the way to the previous resistance level. So it's bouncing off, and once it breaks this resistance level, we have a strong downtrend all the way down, which would make us a lot of money if we were in that trade. But to determine the exit point of this trade, we would have to look at a few other things, maybe even the monthly chart to draw the support and resistance lines, and we would probably have to have some indicators on, but that's not the topic now. That will be topic of next video, of one of the future videos. Okay, so I explained the logic. Also, there is a morning star opposite to the evening star, which is on the bottom of a downtrend, where the first candle is bearish, the second candle is bearish or doji, and the third would be bullish. And we would trade it more or less the same way as we traded this pattern. Okay. So here we have another pattern which is quite common and it's really easy to use. It's the shooting star pattern. You have this is the one in the bullish trend, so it's in an uptrend. It's at the top of the uptrend, so we are looking for the inverted hammer candle on top of the uptrend. In a downtrend, we would be looking for a hammer candle. Let's focus on this. As I said, it is the easiest to spot pattern of all, as it is basically a single candle on top of an uptrend. After a strong uptrend, the market is looking for a reversal or correction, which would be confirmed with the formation of a pattern. The candle we are looking for is an inverted hammer, and the longer the upper shadow, the more important the candle. The full body of the hammer can be transparent, but we would prefer a bearish in an uptrend. Although it doesn't really make a big difference. Again, we have to wait for the candle to end to have the confirmation, and the next candle actually validates it. So the next candle has to be bearish white, not breaking the highs of the previous candle. Okay, the price starts to go down. The price starts to go down here. Okay, and actually it makes a pullback, and that pullback is the sell-off position. So how do we use the hammer? Uh, we will draw resistance support line here on the bottom of the hammer. So this is an open price for this hammer, and it would be the closing price if the color of the body was white. So if it was a bearish hammer, it would be the close price. But it doesn't matter. It's only you have to remember the resistance support line is drawn on the bottom of the hammer. So the price went down, and we got the confirmation candle because it's a bearish candle. And in the next candle, we have a move upwards just towards the resistance line. So, as I said before, we have those veteran traders, those professional traders that they don't like to risk much. So, in this position, they would enter into a sell position with minimum risk. And afterwards, the price goes down in quite a downtrend. So, we would have a nice take profit. We would make a nice profit if we were in this trade. Also, I wanted to show you what this is a channel here. I wanted to show you that also the price went up, but it went up within a channel. And here we tried to break this channel. In this candle, we tried to break this channel, but we couldn't. And so the market is being taken over by the sellers. If we zoom out a bit and look at the graph more carefully, so we would have a good entry point around here and take profit. Well, we can determine take profit in different ways. One take profit could be on the bottom of the channel. Second would be on this resistance line here, and third would basically be on this trend line. And as I spoke before, as I mentioned before, the intersections of the lines here have the highest importance. So this would be a really good level to take the profit, and it really came true. So we would make a nice profit if we made this trade. Okay, so this is all for now because I don't have time to do more. We will talk about more patterns in the next videos. Thank you for joining us, and hope we see you next time.